We are started.
Yay. Okay. Hello, everyone. Welcome to today's QuickBooks Online with Kristen Cavateo. She'll introduce herself in just a moment, but we are so happy to have you with us. Main thing to know is that you're in control of your audio and video. So it's really about how comfortable you are having it on, piping up and answering your questions live. You're welcome to do that throughout the session. If you feel more comfortable, you can also submit your questions via chat, which is at the bottom of the Zoom window, and the webinar recording will be sent to you. Let me tell you just a little bit about SCORE New York City. SCORE itself is a nationwide organization. Here in the New York City chapter, well, actually all across the country, I should say, we're a nonprofit resource partner of the Small Business Administration, and we've been around for 55 years. Now, here in the New York City chapter, we have over 70 highly experienced mentors with a wide range of backgrounds, including finance, sales, marketing, web, nonprofits, book publishing, it just goes on, bridal manufacturing, bridal dress manufacturing, just a wide range of topics. We advise about 6,000 small business clients each year. And we do that in free one-on-one business mentoring sessions. So these are hour-long sessions where right now, due to COVID, we're doing them all virtually, so via video. They are hour-long sessions, and you're welcome to develop an ongoing relationship with that mentor and meet with them as many times as you like. We've had people be with us for 10 years. You know, we can really be there with you for the life of your business. You're in a webinar today, and you can always find the most up-to-date list of our upcoming webinars at newyorkcity.score.org. So with that, I'll turn it over to Kristen.
All right, perfect. And I will share my screen. Let's just share the entire screen here.
A quick question. So somebody said that this will be recorded and sent to us?
Yes.
Now?
Yes, it will go to the email address you registered for this webinar with.
Perfect. Thank you very much.
Okay. So to get started, my name is Kristen Cavateo. I am a CPA, and I am a senior accounting technology consultant at Presti and Nagley. Presti and Nagley is a full-service accounting firm that's been in business since 1982, and we do everything from tax and advisory services to consulting. I'm just gonna mute all. Okay, can you guys all still hear me? You can give a thumbs up if you can. Okay. Okay, so as I was saying, Presti and Nagley is a full-service accounting firm. And we work primarily with small business. We've been in business since 1982, and that includes accounting services, tax advisory services, bookkeeping, reviews and compilations. And what sets us apart from many other accounting firms is that we have an accounting technology department. And the accounting technology department specializes primarily in QuickBooks. As you will see today, I definitely love QuickBooks. I'm a self-proclaimed QuickBooks nerd, and that will come through very much today, I promise. And just a little history of my relationship with Presti and Nagley is I started working with the firm in 2012, and I started on the tax and bookkeeping end of things and did that for about 3 years, I think it was. And I realized that small businesses' books are more important to them than just a tax return that they have to prepare at the end of the year. And I got really involved with the operational side of business and training small business owners and bookkeepers to use their books efficiently and get all of the data in there that's necessary for understanding their financials and where their business stands at any given point. We are similar to SCORE, where Kendra listed that, you know, they work with all different industries. Presti and Nagley, we also are industry agnostic. It does not matter what you do. I mean, we can work with bakeries to, you know, restaurants to mechanics, paint stores, lighting companies, you know, the list goes on and on. But with that being said, we are going today to talk about QuickBooks Online. And we're all going to be using the same company file, just because it makes it a bit easier for everyone to be following the same information. But before we get to the actual test drive account, I'm just going to go through a couple of things with Zoom. I'm sure you guys have all been familiar with Zoom and used it a lot, you know, during this whole pandemic. But you have the option to optimize your screen space. So at the top of the screen where it says, you know, whose screen you're currently viewing, you're going to see you're viewing Kristen Cavateo's screen. There's a view option next to it where you can exit full screen. And that's going to be helpful for you if you want to follow along in the test drive file. You can have my screen on half of your screen, and then your version of the QuickBooks Online file right next to it, and we can go side by side. Next is using the chat. So at the bottom of your Zoom window, you should have a little chat option where you can, you know, put in any questions that you have at any point during the session. I will ask if you are interested in more information from Presti and Nagley to put your email in there, but we'll talk about that a little later. And you also have the ability to raise your hand. If you want, you also, I encourage a lot of interaction. If you want to unmute yourself and just kind of, you know, pop a question in there, then we could totally do that as well. But you do have the option to raise hand, and I will be able to see all of you on the side of the screen, you know, anytime that hand goes up. Okay, so let's go back into QuickBooks Online and the test drive file that we will be using. So I believe Kendra had sent you this link prior to the webinar, but if not, I will put it in the chat. So you can access the chat again at the bottom of your window. Or you can also just Google it. So if you just open up a new window and do it again. Okay, in Google, if you type in QBO test drive, just search for that. It should be your first option, test drive QuickBooks Online by Intuit. We're going to click into that. We're going to tell it that we are not a robot and then continue on. It's taking a minute to load today. But just as it is loading, let's just talk about the different versions of QuickBooks Online. So there are 3 different versions, or rather there's 4 different versions of QuickBooks Online. The bottom tier, the first tier, is called QuickBooks Online Simple Start. And Simple Start allows you to download all of your bank data into your QuickBooks file, bank, credit cards, all of that. Create invoices for your customers and maintain an accounts receivable reporting that's who the balances on all of your invoices, how long they've been outstanding, things like that. And that software runs about $20 a month, and that allows you to have one user access the company file, and you can invite your accountant to share that file with you. You can invite up to 2 accountants. Next would be the Essentials package. Essentials is, I believe it's $35 a month. And that allows you to do everything that Simple Start does, but it also incorporates vendors and bills. So Simple Start allows you to track your invoices that are sent to customers. Essentials also allows you to track the bills that you receive from your vendors, as obviously as well as the customers outstanding. And with Essentials, you do have 3 users that can access the company file at any given time, 3 users to be invited to the file, I should say, and 2 accountant users. And then you have the Plus version. So Plus is what we're going to be using today. Plus runs about $70 a month. It allows for up to 5 users into the company file at a time, as well as 2 accountants. It does everything that Simple Start and Essentials do. But it also incorporates budgeting if you wanted to track your budgets, if you wanted to track different classes, so maybe different departments within your business. One good example is nonprofits. They have to track administrative expenses different than functioning and, fundraising and programming. So if you need an additional breakdown of your expenses. This also allows for project tracking and has a bit more in terms of reporting than the other two systems do. When you sign up for QuickBooks Online, I would always recommend starting with the lowest tier, and you can always upgrade. It is always, always, always easier to upgrade than it ever is to downgrade. So if you do not know, start with the lowest one and you can always move up. In that same vein, if you have not purchased QuickBooks yet, have not purchased QuickBooks Online, Preston and Nagley, we are Intuit resellers, and we get the best pricing on the market for Intuit products. So if you are interested in purchasing with our discount link, we get 50% off of the subscription for the first year that you have the software, as well as a 30-day trial period. So if you're interested in that discount, you can put your name or your email address in the chat, and I can send you that email with that link after the session. Okay. Does anybody have any questions before we actually jump into QuickBooks? Is everybody at this screen seeing Craig's design and landscaping services? I guess it would be if anyone's having problems, then just speak up. Let me move everybody to this side. I have two screens, so let's utilize them right. Okay, perfect. So to get into QuickBooks. So this is going to be your QuickBooks Online dashboard. Every time you log onto your QuickBooks file, this is what you will see. On the left side menu, this black bar is going to stay on your screen 99% of the time. This is how you access all of your different menus and how you would create new transactions. We'll go through all of that in just a minute. Then along the top, if you wanted to hide this black bar, you can simply click those little three bars there. It'll give your company name, the ability to contact Intuit for help, and My Experts is just Intuit support. The recent transactions, any notifications, and your company settings. The last one is your company ID or your Intuit ID and managing your Intuit profile. Let's talk about the dashboard for just a minute. When you first come into your QuickBooks file, the name that you will see will be your business name. When you set it up, it asks you a few simple questions. What's your company name? You know, what industry you're in, if you have employees, things like that. So your company name will be displayed up at the top. You can include your company logo if you'd like. If you attach your company logo here, when you go to create invoices, that logo will, you know, live with the company name. Upon setup, you will also see this setup guide, which will kind of guide you to setting up your bank accounts, your invoicing. But we will talk about all of that today, so you can ignore the setup guide for the time being. And then just scrolling down just a little bit, you're going to have the detail, a little graph of your invoices, what has been sent out or unpaid in the last 365 days, and what's been paid within the previous 30. You would also have the similar thing for expenses. Then you have your bank accounts that are connected. We're going to start with bank accounts today. That's why we're going to really bring in 90% of the transactions to our QuickBooks file and start building our reports. A little bit further down, we have the detail of our profit and loss. And then we would have a sales report here. Let's see, click here to see the info. There we go. So your expense detail, your expense graph here is broken down into the main buckets of your different expenses, what's been posted to your books in the past 30 days, and similar on the sales side. Again, it's taking a little long to load today, but we will get through it. Okay, now going down the left side menu, we have our dashboard. That's how we would get back home. Banking is where we're going to start today. We are going to connect our bank accounts to our QuickBooks file and record every transaction that has happened in our bank account. But before we do that, we're going to keep going down and understanding a little bit of navigation first. Then we have expenses. Expenses is going to be anything related to vendors. Now, it's important to note that there's terminology in QuickBooks related to your transactions. So within QuickBooks, vendors are individuals or companies that you pay money to. That's where your expenses are going. So whether it's a vendor for your actual materials, if you sell inventory, things like that, or if it's, office, like Office Depot, Home Depot, something like that, those are all considered your vendors. Just another thing for terminology, you receive bills from your vendors and you send invoices to your customers. So this is where we would find our vendor list and our listing of expenses. We'll talk about that in like the second half of today's workshop. Same thing with the customers and invoices. But under sales is where you would find your customers, and customers are individuals or companies that you receive money from. Okay. And we send invoices to our customers. Again, we will talk about this a little later, but we will also set up the products and services that we sell as they relate to our invoices. So that's why that's underneath our sales here. Projects, this is only a feature of QuickBooks Online Plus, so we will not be really getting into that today, but just so you are aware of what it is. If you are a company that you have a relationship with your client and you have multiple purchase or sales orders outstanding at a time and multiple projects with a specific customer, possibly multiple locations under a customer, you might want to set that up as projects, and you can do reporting on like a profit and loss for each one of your individual projects. You can also do budgeting for projects and things like that there. Next is payroll. And other than vendors, employees are the individuals who you also pay money to, but those would be the individuals who are working for you. We are actually creating a W-2 and sending that to at the end of the year. Payroll is not something that is out of the box with QuickBooks Online or any QuickBooks platform at all. But there are multiple different versions of payroll through QBO. You can actually process it directly through the system. It would direct deposit to each of your employees, track the taxes that are due, withholdings, and then there are also different tiers of QuickBooks Online payroll as well that Intuit would handle the payment of those tax, the tax payments for you, as well as the tax filings and preparations of W-2s at the end of the year. Also listed here, you have your contractors. So with our vendors, we'll also talk about this a little bit later too, but anybody who you have to issue a 1099 to, a subcontractor who you pay $600 or more, if they are marked as a 1099 vendor here, they will also show up in your contractors list here. Okay. Next down is reports. QuickBooks comes with 120 stock reports. Every one of those reports can be customized and saved as a custom report. So we'll talk about reporting a good bit today. There are 4 reports that we will cover in detail, but those 4 reports will really help you to understand really almost all of the reporting you can get from QuickBooks. Next is going to be taxes. So if you collect sales tax from your customers, if you have to manage your sales tax payments, things like that, that would live under your taxes here, as well as payroll taxes. So if you have payroll turned on and are using the actual QuickBooks or the Intuit payroll options, your payroll taxes would live under this tab. Okay, we got 3 more on screen, and then I have 2 more, or 1 more to talk about. Then we have mileage. I've never actually seen anybody use this, but this is available to you. If you do track your mileage, your business mileage, you can track that in your QuickBooks file, allocate it to jobs. You can use the QuickBooks Online app on your phone to track your mileage. It'll connect with the location and actually, track it for you automatically versus having to type in how far you had gone. Okay, then next. My mouse is going to freeze on me today too. The next tab is accounting. So here you have your chart of accounts and the option to reconcile. So your chart of accounts. Your chart of accounts, when you first set up your file, Intuit is going to ask you what industry your business is in. And it's going to give you a generic chart of accounts for that business. Your chart of accounts is essentially the listing of your categories. How do you categorize everything that happened in your bank account and your credit card statement and loans and things like that? It's your listing of categories to understand where your money came in from and where it went out to. Again, we're going to talk about that more when we're talking about the bank feeds. We're going to establish that chart of accounts as we're doing our bank data. The next is reconciling. So we're going to focus mainly on banking today. That's going to be the first half of this webinar. And downloading those transactions from the bank, which helps us to record them. Reconciling is ensuring that everything that happened in our bank account is recorded in our QuickBooks file, and vice versa, because if it's recorded in QuickBooks and not in the bank, we want to understand what happened there. If it's a bank error, if it's a recording error, things like that. Then lastly listed here is My Accountant. So as I mentioned before, with all the different versions of QuickBooks, you do have the ability to share your QuickBooks file with your accountant, with the person who prepares your taxes, or with a bookkeeper. It also gives you the option to search the Pro Advisor network. So what Intuit has done for their support is they've created this network of over 100,000 Pro Advisors across the country. And they are individuals, bookkeepers, CPAs, accounting professionals who specialize in QuickBooks. So if Intuit support is not kind of helping you in the way that you need, there's a whole network of individuals out there who can help you. So that My Accountant link, it does give you the link to search accountants near you to find Pro Advisors. Just so you are aware, Presti and Nagley, we are the largest Pro Advisor firm in New York City. We have 40 people in the company, 35 of which are Pro Advisors. And, you know, just to toot my own horn a little bit, I'm linked #2 in New York City. So you don't have to look for that list. You have me now. So, and then on your version of QuickBooks, the one that you're actively using, that you're the administrator of, you will have another tab listed here, and that's going to say apps. So Intuit, again, it's used its resources very well here. Intuit understands that they are great at building accounting platforms, the accounting system, managing, you know, the basics of invoicing, bills, your bank transactions, things like that. It also realizes there's a lot more that goes into accounting and bookkeeping and the preparation of financials than just those items. So it has partnered with over 1,400 different applications that directly link to QuickBooks and integrate. So if QuickBooks doesn't do something out of the box like what you want it to do, you can connect it to one of these apps out there. Some of them have their own other subscription plans. Some of them are free. You would have to look into those different apps to find what you're looking for, but they are there and they do exist. A couple of examples of that would be like inventory maintenance, managing your inventory. If you have a warehouse that you're managing, maybe you want another platform in addition to QuickBooks, because QuickBooks does inventory tracking, just not the best. There are a lot of things that go into inventory that other platforms handle a bit better than QuickBooks. There's also accounts payable programs and timesheet time tracking data. If you use T-sheets and want to allocate your employees' time to individual jobs, that's an app that connects with QuickBooks. The employee would have access to it on their phone and they would never have to be in your accounting system. So those are just kind of examples that are out there for you to explore. So, okay, does anybody have any questions before we get into the actual bank transactions and recording what's going on in our bank activity? No? Okay, great. All right, so where we're going to go now, oh, one more thing before we get into the banking. You have this new button here. This is how you create new transactions. So you have these three different, the first three are based on our names, who we received money from versus who we paid money from, and the transaction types associated with those names. So as I mentioned before, we send invoices to our customers. So customers, our first column, we can create an invoice for them, receive payment, create credit estimates, credit memos, sales receipts, and so on. Vendors, again, are people who we pay money to that are not our employees. We can have the ability to write expenses, checks, bills, purchase orders, and then employees run payroll and record their timesheets here. I'm just going to put the link in here just one more time in the chat. And then lastly, we have a column titled Other, and these don't necessarily relate to any specific customer, vendor, or employee. They could be bank deposits, transfers, journal entries. and so on. Where we're really going to focus right now is cash basis transactions. Again, we're focusing on the bank money that's actually been moved. We're really going to focus on expenses and checks and bank deposits. First half. Second half, we'll get into invoicing and bills. Okay. Now let's go into banking. So just, Gail, I know that you had jumped on just a little late. I just sent the link to you in the chat and we just went over navigation. So we're going to go through actually recording transactions now. Okay, so I'm going to close out of this pop-up and go through what it's actually saying. So under your banking window here, we have the first three things that you're seeing here, these three boxes, are accounts that are connected to QuickBooks, that are linked to QuickBooks. Now, I would always recommend linking your bank account to your QuickBooks account. And with that noted, QuickBooks is not moving any money around with linking your bank account here. QuickBooks is only linked to your bank account and pulling transaction data. So it's only pulling dates of your transactions, the descriptions of your transactions, and the money that has been either spent or received. It's not actually initiating that money to be spent. It's not pulling that money in from somebody else's bank account. It is literally just pulling the data that's already happened. You can have Intuit pay your bills for you. You can have it take payments from your customers, but those are add-ons. That is not what's happening in this screen. This screen is just connecting with your bank and pulling in transaction data. In order to do that, and connect your account, the first time you log in here, you'll see a nice green button that says connect your account, but just so you can get an idea here. If once you do have accounts connected, you can add additional ones by selecting this link account over to the right side of the window. You guys don't have to do this on screen. You could just look at mine for a moment because we can't get much further than this part anyway, because it's a sample file. So you're gonna, Intuit's just gonna drive me crazy today. So when you go to connect your bank, what you will see, we should see in that box is a selection of the most popular bank accounts. So you'll see Chase, Bank of America, Wells Fargo, American Express, PayPal. Let's see if it loads right this time. I guess not. Okay, but what would happen is it's also going to have a drop down to search the most common all of the banks. 99% of banks have a connection with QuickBooks, and because it is the largest small business accounting platform out there, so they do have an integration 99% of the time. And what you would do is select that bank account. So let's pretend it's Chase. You would select Chase off, and then the next screen that would pop up would be to enter your username and password to Chase. Once you do that, all of the accounts associated with that login are going to appear. You would then select off which accounts you want connected to your QuickBooks file. I would connect all bank accounts that have your that are related to your business, that have your business name as the account owner. You want all of those accounts connected to your QuickBooks file. Let's see. I hope you're right, Victoria. No, it's still not working. Okay, but then another thing that it's going to ask you which accounts you want connected. Then it's also going to ask you how far back do you want to bring in that data. And it's going to default to the beginning of the year. So if you have not set up your account, you haven't done anything in your QuickBooks file yet, let it bring back the data to January 1st, 2020. Let's link account again. Okay, well, that's okay. The real meat and potatoes of doing it is here anyway. So in this sample account, we have 3 accounts that are connected. We have a checking account, a savings account, and a credit card, a MasterCard. At the top in the blue here is what the balance is per our bank. Then we also have when it was last updated. QuickBooks should refresh this every time you log in. If it does not refresh to say updated moments ago, you can click update to the right of the screen, and it should refresh. If there's any issues with the bank connection, you'll get a little notification. Maybe you have to update your password, something like that, but it should work seamlessly. Below the bank balance, you'll also have what's the balance in your QuickBooks file. So these are your posted transactions. This is your book balance versus your bank balance. The number in the bottom right corner here is the number of transactions you need to review to bring your in QuickBooks balance to match your bank balance. Okay, the same on each one of these. If you're going back to the beginning of the year, that number could be quite large, but we're going to go through efficient ways to add everything in. So don't be discouraged when you see that. Then we come down just a little bit further. We have 3 categories here. We have for review, categorized, and excluded. So for review, the 25 here, these are the 25 transactions you need to review to bring your in QuickBooks balance to match your bank balance. As you start reviewing those transactions and adding them to QuickBooks, they're going to move to the categorized tab. Then you have excluded. You should never really use excluded. The excluded is only used for kind of unique kind of situations. If let's say you went and you downloaded all transactions dating back to 2019 when you already had that data in there, you would exclude those transactions. A lot of people like to exclude transactions, like if their personal expenses are included on their business book, on their business checking account, then they tend to exclude it, but we don't want to do that. The reason we don't want to do it, you can also do it for duplicate transactions. That's another good use for it. But you do not want to exclude any personal expenses that you have coming through your bank account. And the reason for that, and the reason we start with banking, is because if all of your income, all of the money that's been received has been recorded, that means that all of your cash sales have been recorded. Cash meaning cash, credit card, bank deposit, those sales have been recorded. Money that you've contributed to your business would have been recorded. Any loans that you received through your business checking account would be recorded. So with all of that, you record that money received. That's a lot of information that you get just from your deposits. Then you also have money that's been spent. If we record everything that's been spent out of your business checking account, you're going to have all of your business expenses, maybe some personal expenses, withdrawals from the business, distributions, payments of loans, payments of credit cards, maybe employee payroll. All of that is going to be seen in your money spent. So if we record all of the money that's been received and all of the money that's been spent for the entire year, then your profit and loss, your sales and your expenses are going to be 90% there. If you have, it really depends on how many accounts that you have, and a lot of that gets seen in your business checking account, because what will happen is if you have payments to credit cards that you don't have connected to your file, then it begs a question, how many transactions on that credit card need to be recorded are business expenses? Should that be connected as well? Loans that have been received, should we connect those? I would recommend connecting every third-party financial institution that you can. So that means any checking account, savings account, credit card accounts, lines of credit, loans, any of that, put it into your QuickBooks file and connect it. The reason I recommend doing that, again, for the purpose of having all of the deposits recorded, all of the money spent recorded, but it makes it more efficient because it's bringing in all of the dates of transactions, the bank descriptions, and the dollar amount spent or received. There's no transpositional errors, anything like that. I have a question. Can you add a PayPal account? Yes, you can add a PayPal account in one of 2 ways. You can add a PayPal account and have it connected as a bank account here, or there's an app integration with PayPal as well that you can use. So I made 2 initial deposits. Correctly finding one for what bank shows it as 1 deposit. I just saw one other question. Yes, you would record that as 2. You can record it as 2 different transactions, but because they're for the same, no, they're not for the same. I would record it as 2 different transactions. Just in the response to the question in the chat. Okay.
I'm sorry, Kristen. Can I ask? I was trying to type it in the chat and I'm slow. I need you to just repeat why the bank balance and the in QuickBooks balance is different.
So
Before we get so far in.
yep. So the bank balance are transactions that have been posted to your bank account.
Okay.
So that is like what if you were to look at your Chase account as of today, that's what the bank balance would show. Your in QuickBooks balance is the transactions you have posted to QuickBooks. So these transactions here, although we're looking at them through QuickBooks, like in the QuickBooks platform, these aren't posted to your account. These are sitting here waiting for you to review and then get posted and start affecting your financial statements. So it's almost as if QuickBooks, they're in a queue. They're waiting to be categorized. They're waiting to affect this balance. Does that make sense?
The 3,600 is all of the transactions that are in my bank, the
Correct.
bank account that I have connected to QuickBooks.
Mm-hmm.
So there are 25 transactions that are waiting review that once reviewed might reflect the actual transactions of the 3,600.
Correct. It should
Okay.
bring this in QuickBooks balance
Okay.
to match your bank balance.
Okay, thank you very much.
Yeah, no problem. I have another question. Can you show me how to add the PayPal account? The PayPal account gets added the same way as the checking, savings, and credit card. By clicking this link account, PayPal is one of the options. And then you can sign into your PayPal account and it will connect automatically to your books or to your QuickBooks file. Okay. So I'm just going to keep scrolling down just a little bit. And we're going to filter everything by date here. I also have another feature that I want to talk about that QuickBooks just recently released, which makes this process a bit easier. But we'll go through the first one together without that feature, and then we'll talk about it. Sorry, I'm just kind of thinking out loud in my head because it's a new thing. I haven't talked about it before in these workshops. Okay, so with this first one, you want to have this sorted by date. So the newest transaction sitting up at the top, the newest transaction is dated January 16th, 2021, with the description books by Bessie, money received of $55. Okay, so if I click anywhere along this line, except for where it says add, do not select any option for action add. We want to select anywhere else along this line. Okay. When we open up the transaction, we have a couple of things that we can add here. One thing that we want to add is the vendor or customer. So where did this money come from? Who paid us? Is really the question that this is asking. Then you assign a category. Why did they pay us? So really think about these as the vendor customer is the who and the category is the why. Okay. So where it says vendor customer books by Bessie, QuickBooks is it's a pretty smart software, and what it does is based on the bank detail here, it's going to search through your vendor and customer list to find a name that's close to this and automatically assign it for you. Sometimes it's right, sometimes it's wrong, but this is why we do a review to make sure. Also based on books by Bessie, that bank detail, it also starts creating rules and categorizing transactions for you, but we'll talk about that in the next one. So vendor and customer here, we're just going to select that field, and where it says books by Bessie, let's just remove that name entirely. And then where it says select payee, we're just going to change the name around and we're just going to call it Bessie's Books. I just want to show you how to create a new name, create a new customer. Okay. So as soon as we start typing that, that's not listed in the file anywhere, we have add Bessie's Books appear. We're going to select that option to add. And now this is my new name. The only thing I need to enter to save a new name is the actual name of the customer, the display of the customer in your books. Because this is money that's being received, QuickBooks defaults my type to customer. You also can choose vendor or employee. So we're going to go with customer. And then for you following along with me, you can click save here. I'm going to select the option to add details. So select save, and I'm going to select add details, and then you guys can just look at my screen. So as I mentioned, the only thing that's required to save a name is the display name, what we just typed in. So we have Bessie's Books here. Then we have other contact information related to Bessie's Books. If we wanted to include the company name, maybe the contact that we work with there, an email for that company, phone number, website, and so on, as well as their address. Then you have a couple of tabs. One is for notes, notes related to that specific customer, tax information, if they are taxable or not, and what their default sales tax code would be. Payment and billing, what their preferred payment method is. If you have specific terms with that customer, you can select that. If their invoice needs to go out in a different language, you have 6 different options here. And then you also have attachments. So if you wanted to include maybe attachment of a proposal or an engagement letter or a contract, you can attach that to your customer profile here. And then lastly, you have additional information, which is customer type. So commonly you see wholesale versus retail, or for maybe real estate, commercial versus residential, things like that. And then we select save. Does anybody have any questions on customer information? Sorry, I have another question here. Add the transaction to QuickBooks. That's what we're doing. We're in process of doing. And can I add only the invoices from PayPal and not all the transactions loaded to QuickBooks? If you wanted the invoices from PayPal loaded and not use it as a bank account, then you want to use the app that connects QuickBooks or that connects PayPal to QuickBooks, not the bank feed connection. So as I mentioned earlier, on that left side menu here below where it says My Accountant, you will see apps and search the App Store to find PayPal. You'll also have to set up a mapping of what data you want it to bring over. Okay.
Hi, excuse me 1 minute. This is Lori Bennett. Would you show me where you clicked on for add detail? Because I missed that. So if I want to add detail.
On the next one that we create, we're going to create another name on the next transaction. So I'll show you there. Okay.
Thank you.
No problem. Okay. Does anybody have any questions related specifically to the customer profile? Okay, great. Okay, so then I click save there. And now that name's been added to my list. And then we have the category. What did Bessie's Books pay us for? And we're going to create a new account here. So we're going to create a new account and we're going to call it retail sales. So select where it says category and then delete what's in there and start typing in retail sales. Similar to when we typed in Bessie's Books, because it doesn't exist on our chart of accounts or our listing of categories, however you want to refer to it, we're going to have to create a new one. So we have the add retail sales up here. Okay. Now this is our new account window. So new account requires 2 pieces of information, unlike the customer and vendors that only require a display name. The account name or the new account requires 2 pieces. It requires an account type and an account name. Although detail type is listed as, it has this little red star indicating that it is required, it does not do anything to affect your books. The only thing that affects your books are the account type and name. The account type helps us to determine what report it's going to fall onto, and then the name is how it's displayed on that report. So using the account type drop down, just to show you what these options are, you have accounts receivable down to equity is all of your balance sheet accounts. So accounts receivable down to other assets are all of the assets, what your company owns, whether that's in form of cash at a bank account, accounts receivable balances due from our customers, fixed assets, a building, a piece of land, a truck. Other assets, maybe security deposits. These are things that your business owns and provide value over time. Then you have accounts payable down to long-term liabilities. These are all of your liabilities, money that you have due to people, balances you have due. Accounts payable are balances due to our vendors based on our bills that we enter into the system. Credit cards, obviously credit card balances. And then other current and long-term liabilities would be maybe loans that are outstanding, lines of credit, things like that. Shareholder loans. Where would rental inventory be listed? Accounts type section. Inventory would be a other current asset. Then we have equity. Equity, if I can speak, is money that you as the business owner have contributed to the company or money that you have taken out of the company. It's the initial funding. It's money that funds the business. Okay, then you have income down to other expense, and this is going to be everything that sits on your profit and loss. So one way to easily distinguish these, the two reports, balance sheet versus P&L, I like to think of it as the balance sheet is my accountant's favorite report, and the profit and loss is the small business owners or bookkeeper. The accountant is your balance sheet. It shows the value of your business at any given time, and the profit and loss is where your income and your expenses. 9 times out of 10, when you are setting up new accounts, you will be setting up new expense accounts. The reason I say that is because as small businesses, or businesses just in general, based on their nature, have maybe 1 or 2 main income streams. Maybe you have, you know, like commercial, maybe you have commercial property, like rental properties. Maybe you have commercial rental properties versus residential rental properties. You want to track the income, how it comes in from both of those. Wholesale sales versus retail sales. Maybe those are 2 different income streams. And then you have your expenses. Your variety of expenses to keep your business running, that is a very wide range. You have things like advertising expense, professional fees, office expense, payroll expense, rent, repairs and maintenance, travel, the list goes on for your expense accounts. So 9 times out of 10, you will be setting up an expense account versus an income account. When would you use bank? Bank would be when you're setting up, bank would be an actual bank account. So bank accounts, checking accounts, saving accounts, a payroll account, possibly an operational account. Let me think. Petty cash could possibly be a bank account. That would really be that would be really the uses of banks. Okay. Okay, so retail sales, that's going to be income to us. So we're going to select income over here. Okay, sorry, I'm just looking at the question. I'll get to that in just 1 second. Let's go through finish going through this and I'll look back at the questions. Okay, so we have account type of income and the name, how I want it to display on my reports. I want it to read retail sales. The detail type here, again, it does not affect your books at all. It's kind of just there to help you to determine if your account type is right. That's really what the main use of this is, because your detail type here filters based on your account type. So if I select detail type and look at the drop down, and it's going to be everything that's related to income. If it's discounts, refunds given, if it's nonprofit income, other primary income, you know, so on. I'm going to select sale. I'll select other primary income. So although it doesn't affect your books, I am an accountant. So by nature, I'm a little bit more anal and like all of the detail. So I change it, but you don't have to. Okay. Does anybody have a question on the account setups? Like just the account, not specific to, I don't know, anything. Okay. So we're going to go to, we're going to hit save and close down at the bottom.
Would this be where the account type, like to differentiate the monies coming from grants? Is this where we would address that?
You can do that here, but you have a couple of different options when it comes to nonprofits and receiving money through grants. So you can have one account called grant income, and all of your different grants can be put into that bucket, just grant income, and then you'll know where that grant came from based on the customer that you put in there, the payee that you put in that on that deposit transaction. So that's one way to break it out. Another way to break it out is if you use classes in your QuickBooks file, you can say, let's say you need to track income and expenses for a specific grant, then you would want to use class tracking. You would not want to create an income account for every single grant that you receive or every individual customer who pays you something, because then that income account is going to get, or your profit and loss is going to be very long and difficult to read. So you want the accounts when you set them up to be general, but specific enough to capture what the point of the account is. So
you say, I'm sorry.
No, that's okay.
So you say class tracking?
Class tracking, yes. So, and for nonprofits, at their core, just creating a list of functional expenses, the basic classes for nonprofits are usually administrative, fundraising, and programming. Within QuickBooks, you can break it into those 3 classes, and then you can also take it a step further and then say, within my fundraising class, I have grant A, B, and C there. And then you have different levels of class tracking that you can do in QuickBooks. You also have the tags feature, and that's a new feature in QuickBooks as well. I don't know how that works as far as reporting is concerned. It just was released within the last month. But that is another option for you.
So we can then, through reporting and classes, track all of the money or expenses assigned to grant A as differing from the expenses that were attributed to grant B.
Correct. Correct.
Okay.
Yep.
Thank you.
No problem. No problem. And then let's just see. Listed my inventory purchases under expenses. Should I change? Okay. So there's one question that says inventory purchases were listed all as expenses. Should they be changed to other current assets? So inventory in and of itself is it's a bit of a beast to track. So we don't really cover inventory much in today's webinar. And the reason for that is because inventory has to do with how we purchase inventory, the units of measure to purchase that inventory. If you purchase cases and then sell them as individual items, creating that relationship between the units of measure, the receiving of it from all of your vendors. If you assemble your items, your inventory before they go out, there's a lot of different factors that go into maintaining inventory. The biggest difference I'm sorry, what'd you say?
I was going to say, so the inventory are rental inventory, so they go out and come back, so that they do depreciate, I guess.
Okay, so then is it necessarily inventory, or is it an asset that you're holding?
That's what I was asking. I asked a previous question because all of my spend was categorized as expenses, but those items are still, I have them and I rent them out and they come back. I have basically, they're not listed accurately as assets.
Mm-hmm. Okay, so that was going to be my next point, to know if it's an asset that you have versus what that really looks like as the difference on your books. So when you have things categorized as inventory, that belongs on your balance sheet. It's something that your business holds and it has a value to generate income in the future. You want to maintain a quantity of it. You want to track how much of it is outstanding at any given time. That is when you would use inventory. When you categorize something as non-inventory, right? Because we're going to we'll see this when we create invoices, but we'll get a little ahead of ourselves now. But if you have, that's okay. If you have things categorized as non-inventory, so those are items that you purchased as a business that you don't necessarily care to keep track of. So rental inventory is a little bit more complicated because I think there's a fixed asset portion in there, but I'll give the example of a contractor or a carpenter, okay? Or I'm sitting at a table, somebody who builds tables. Let's go with that, okay? So a furniture builder. He would want to know how many pieces of wood he's purchased. So he would have like how much mahogany, oak, pine, whatever, all of those different pieces of wood, how much of it he has on hand at any given time. He also, to assemble the tables, would need to know or would have to buy screws and nails and bolts and whatever else. Those would be non-inventory. He wants to know that the wood that's on hand, how much is because it's going to bring him value in the future. But all those individual nails and screws and all of that, he doesn't care to know how many of those he has on hand at any time. So that's just expensed right away. So kind of what your accountant did for your books, he took your rental properties and expensed it right away, taking that value against your income versus taking that over your time or when it was actually sold. So that's where that difference really comes in.
Okay.
So, okay. It's a little complicated, but, you know. Okay, and then another question is, when would you use sub accounts? So sub accounts would be used if, let's see, there's a couple different reasons for using sub accounts. So sub accounts would be, if we say professional fees. Okay, you can have one account on your books called legal and professional fees. That is completely acceptable in the tax world, financial statement world, whatever. If you wanted to see the breakout of legal of professional fees, and you wanted to see how much you spent on a lawyer, how much you spent with an accountant, how much you spent with a consultant, computer tech, things like that, you can break all of those out under your professional fees. So when you're looking at your profit and loss, you can see one line of professional fees of however much that is, and then you can see that amount broken into, you know, legal for that total, accounting for this total, IT for this total. So it kind of just helps to group and summarize your accounts on your books. Now, I have one client who does a little bit of overkill with it, I would say, where he wants to track all of the detail for all of his accounts. So like he has a sub accounts for his bank service charges. Under his bank service charges, he knows how much he spent on ACH fees, how much he spent on late fees, how much it's his way of tracking like just the detail of that bank account, those bank charges. So for the accountant's level, for taxes, for bank purposes, things like that, that one parent account would hold the full balance. The sub accounts provide that detail to what is the parent account. Does that make sense? Okay. Then you have, how would you categorize a loan? A loan, you would create the name of loan from, you know, Bank of America loan, something like that. And your account type would be either other current liabilities or long-term liabilities. The difference between the two is other current liabilities, current assets. They typically are settled within a year. So if you have a liability like the PPP loan, that would probably be considered an other current liability because those are received and either forgiven or paid within a year of receiving it. Things like a mortgage would be considered a long-term liability because you have 15 to 30 years to pay that balance back.
What about if you you did a personal loan to your company? Where will that fall into?
Then it really doesn't matter. It doesn't affect, it doesn't, they'll sit in the liability section of your books. Okay. So I'm going to select save and close here. Okay. And we have our vendor customer, Bessie's Books, that's our who, and the category Y is retail sales. So Bessie's Books paid us for retail sales is essentially what this transaction is. Okay. We can include a memo here if we would like, just to stay with the transaction. The bank detail always will live with the transaction, so that does not go anywhere. And then you can also do things like add attachments. Like we had talked about with the creating the customer side, you have attachments, you can add proposals, engagement letters, contracts, things like that. On individual sales, you can include copies of receipts, you know, whatever you want to attach to it. It takes PDF documents, any Microsoft Office documents, pictures, whatever, it doesn't really matter. And then you have the option to create rules. We'll see this in the next example I give you. And then you'll also have the option to exclude, which you should be ignoring for the most part. After all this information is populated, we have our who and our why. Those are the only pieces of information that are required. We can select the option to add in the bottom right corner. It's just going to take a second to load. Okay. So now the next thing I want to show you is the new feature I had talked about earlier in QuickBooks, as it's called groupings. So to the right of the transaction data, you have this little cogwheel, a little settings icon. This is your settings icon for your bank feeds. You have your company settings up at the top, and then you have the bank feed, what we're looking at here. settings for this as well. So if we click on this little gear icon, we can add a column for check number if we want the column for payee to be there or not. A payee is not required, but pretend you didn't hear me say that because it's better to have a payee than not. And then you also have turn on groupings. If you want to show amounts in column, these different options listed here. What we're going to do now is just toggle this little radio button here to turn on groupings. And so we can use groupings for any of these different column headers here. You can group by date, description, payees, categories, money spent, or money received. Grouping by date helps us for reconciliation purposes. We'll get to reconciling in just a couple minutes. Reconciling, you take a statement through an ending date from your bank, and this helps us to make sure that anything through that statement date has been entered into our file. I would always recommend grouping by description or sorting by description. The reason I say that is because we use our descriptions to populate our names and our accounts. Whether that's money spent or received, it's somewhat irrelevant. The description is really what matters here for populating the payee and the category or match. So to change the grouping, rather than having it grouped by date, I'm going to just select description up at the top. Okay. And we see books by Bessie. Not books by Bessie, I'm sorry. A rental. You see these 3 transactions. Does everybody see those transactions for a rental? Okay. So with books by Bessie, we selected the one line that the transaction was on. In this case, I can modify all 3 transactions in one shot. So I can either select the little box here at the header name, the group name, or I can select the 3 off individually. It doesn't really matter which option I choose. Yes, efficiency-wise, you want to select the group name so you don't have to click off 3 times. And then at the top, we have this little black bar that will appear. It's going to say accept, update, or exclude. Again, we're ignoring exclude for the time being. We should not be excluding any transactions here. We can accept, but we don't want to accept yet. We haven't assigned a payee or a category, so we want to select the option to update. So when we update, we're updating the payee and the category. So who did we pay and why did we pay them? So when we have the select payee, we're going to type in A1 rental. Similar to what happened with books by Bessie and with the account name, you're going to see this little gray box appear that says add. We're going to select that box. And this is where you'll see that option to add details. I'm not sure who asked that question before, but this is it. So we have A1 rental here. The type here is defaulting to customer, but we're going to select vendor. A1 rental is a vendor. There was more money spent with them than received. And then we have details. So you guys can all select save here. I'm going to select add details. Okay. I'm going to select add details. And this is my vendor profile information. So similar to our customer name, the only thing that's required is that display name. Okay. All this other information we can enter if we need to. So their contact info, address, and so on. But what is the nicest feature here for vendors is the ability to track their payments for 1099s. So we had talked about it a little bit earlier when it came to contractors and where they appear in our file. If you pay an individual or an LLC for services that equal over $600 for the year, you have to issue them a form called a 1099. That 1099 tells the government that that individual or company had made a certain dollar amount for the year. And it's a very popular thing now that they're kind of cracking down a little bit more because we have so many so many freelancers out there that there's no real way for them to track how money was earned by each of these individuals or what their taxable income is. That 1099 helps to track that information, helps to confirm what people should be reporting on their taxes. So it's important that you issue those when it comes to year end. When you start working with a vendor, best practice would be to get a W-9 form signed. So a W-9 will say the vendor name, the type of entity that they are, and if they would be receiving a 1099 or not, and then their address and social security number or tax ID number. So you would populate the address here, you would populate this business ID or social security number and hit this box for track payments for 1099. If you have that W-9 form signed, I would also include it here as an attachment. So that way it just kind of lives with your vendor profile and you just have that record easy to access. It is also important to note that even though, if let's say you set up a vendor, you worked with them in February, maybe somebody helped you with your computer and you say you spent $200 with them. And you're like, well, I'm probably not going to need that to issue them a 1099. My computer doesn't really go down that often. I'm not really going to need their help. You just set them up, say you paid John Smith, and then you hit save and then move on. If it comes to, November, December, and you realize that your computer broke down a couple of times throughout the year and you ended up spending $800 with this guy, John, then you can come back in here, get that W-9 signed and enter this information later. And all transactions related to that individual would be grouped in that 1099. So it would be retroactive. It lives with the vendor name. So if you forget to do it, it is okay because you can always go back and modify it. It's another important thing to note about QuickBooks. Nothing in here is set in stone or permanent. We can lock down the books, we can reconcile things, but everything can always be modified and it's easy to. It's a good and bad thing about it. The good thing is, even though it is easily manipulated and revised and all of that, there is an audit log which tracks anytime any individual logs into the file. There's an audit history on every single one of your transactions, so you'll know anytime it's been modified, what had been modified specifically. So although it can be customized or modified rather, that history always lives in the file. Okay, anybody have any questions on the vendor side? And I see the question PLLC as well. I do believe so. Would have to get a 1099 for Victoria. And then let's see. Will you discuss reconciliation? Yes, then we're going to talk about reconciliations in a couple of minutes. We're going to finish entering these transactions for A1 rental from the bank feed. And then we're going to talk about writing a check, recording a deposit, and then reconciling. Okay. I'll show you a report at that point. We'll take about a 5-minute break and then talk about invoicing and bills, just so everybody has an idea of where this is going. You only need to track if you are paying the vendor more than, you would need to track 1099 information if you're paying a vendor more than $600 for services annually. So if you were paying for product, you don't issue them a 1099. If it's services, then you would issue 1099, and that's in any form that you give them money. And it doesn't matter if it's cash, ACH, wire, whatever, that's included in that $600. Okay.
Sorry, I have a silly question. How do you register Venmo on QuickBooks?
So Venmo, typically when I've seen people have Venmo connected, it's based on their bank activity, okay. What's actually happening in their bank. Yeah. One other way you can do it, because Venmo does essentially function as a bank account. I know that I don't always transfer my Venmo balance into my personal checking account all the time. I sometimes let it sit, and that could be an accumulation in payments, a bunch of different things. You can, I don't know if there's a direct connection with Venmo to QuickBooks, but you can set up Venmo as another bank account and have those transactions that come in from your bank kind of flow in and out of that Venmo checking account that you set up in QuickBooks.
All right, thank you.
I'm sorry, one quick question. On the cash transactions, when you're paying a vendor through cash, it would be obviously this is not coming through the bank account. So this is, I guess, honor system.
Yes, cash transactions are on the honor system for sure. There's no way for anyone to track that, in all honesty. The only way that it would actually, so it really, the honor system plays the biggest role, especially when a customer pays you in cash. If you have, you know, if you're receiving a cash payment and you don't deposit into the bank, nobody knows that that cash had been exchanged or what you did with it. So
Correct.
it's your responsibility, your honor, that would be determined how you record that in your books. If that happens a lot, and you want to actually track that cash, but you don't actually deposit it into your bank account, you can create an account called petty cash on your books and have that as similar to like Venmo. It's not a real bank account. Venmo, you can actually track a deposit, so it's similar and different.
I mean, the income part is understood, but it's the paying part. If I'm paying someone cash, that person may not want a 1099.
Right. Yes, that's a very true statement. Very true statement.
Okay.
So when it comes to that, like, it's a funny thing to like have to dance around, you know. But when it comes to that, so in the world where a customer pays you cash and you just go and make a cash payment to somebody else, nobody knows that that cash ever existed, right?
Mhm.
However, if you go to the bank and you make a withdrawal of, however, let's say it's a couple $100 and it hits your business checking account, then you have to categorize it in some way that, you know, it would be related to that vendor, but how you actually categorize it, I can't speak to that.
I got it. All right. Thank you.
Okay, no problem. Okay, so we have A1 rental, that's our vendor. Does anybody have any other questions on the vendor profile side? Okay, great. Okay, then you have category. We will be talking about reconciliations and closing, and the next thing we cover after we record this is going to be creating new transactions, just to respond to both questions in the chat. I have to be honest, you guys are a great group and asked a lot of questions. A lot of times I sit here and I feel like I'm talking to just air. Okay, so we have payee, A1 rental, and then the category we're going to use is equipment rental. So that's all three of these transactions are going to be updated with this payee and updated with this category. Okay, you can choose either apply or apply and accept. I'm just going to hit apply so you can see how it looks on your bank feed, but you can select apply and accept. It doesn't, the apply just gives us a second look at it. So I'm going to select apply. And now my three transactions here related to a rental have all been updated with the proper payee and with the proper category. I get this question pretty often when it comes to returns, money coming in from a vendor. So a situation like this, where you have $200 being received. A rental did not give us $200 for income. This is a refund, right? So if I click on the detail here, I'll actually be able to see it. The detail of this says deposit refund. This is money coming back to us, right? This shows that I spent $2,000 with A1 rental for equipment rental, right? I spent $2,000 and they refunded back $200. So I had a net of $1,800 that I spent on equipment rental. And that's how this is going to work here. If I was to categorize this as income, that would be, I spent $2,000 on equipment rental and received $200 of income. So it works similar to any of these kinds of situations. If let's say you went to Home Depot and you bought materials, you spend $2,000 on materials and return $200. You didn't spend $2,000 and then receive $200 of income. You spent a net $1,800 on materials. So just as that's another example here. So QuickBooks has another feature here. So I've added all of the payees and categories in mass based on this grouping, right? Based on that description. QuickBooks is going to remember that the next time a transaction downloads with a rental. Next time it downloads, it's going to populate the payee and the category for me and just be sitting in my register waiting for me to review it. Okay. It makes these smart rules based on what you do. So same thing if you paid Verizon. Every month it would come in Verizon and you post it to telephone expense. QuickBooks would remember that. If, however, I add all of these, QuickBooks also gives me the ability to create rules. So I have these three still selected. And now instead of update, I've already updated. I'm going to select the option to accept. So let's accept those transactions. And now QuickBooks is going to ask me, do I want this to always happen? Is this always going to be done like this? Every time I download with a description A1 rental, should it always be posted to A1 rental as the vendor and categorized as equipment rental? So you can select the option to create rule, and every time that downloads, it's automatically going to do that for you. There's another little thing here to pay attention to, this auto add option. So auto add, I personally don't like auto add. I like to have that second review, but again, goes back to being an accountant and a little anal. So there's that. But if you want this to be automatically added to your books, if you believe every single time it downloads a rental, it should be categorized to A1 rental and equipment rental, it's always going to be that way. You can have it auto add and create a rule to be posted to your books automatically. It won't be part of that 25. It would be less because they've all automatically have been posted. If you want that second review, if you want it to populate for you, but not actually post to your books, you could just turn off auto add and it would create the rule so that every time it downloads that, it's going to categorize that way, but it'll still be in my bank feed for me to review it. So that's up to you if you want the auto add on or off. I'll leave it on. It defaults to on anyway. So we can select the option to create rule. It becomes, the reason I don't like auto add all the time is because there's a couple of situations where it's going to be different. So if you have multiple American Express cards that you make payments to, that might not be one that you want auto added because the account numbers that you're applying those against. If you have, if you're doing job costing, so if let's say you have expenses that you want invoiced back to customers and you want to tag it to those customers, you don't want those auto added. You would want the ability to go back and review it and add that customer to that transaction. But you know, on an overall, it's not the worst thing for a situation like this. So I'm going to hit the option to create rule. Will depreciation and amortization be covered? Not really. That's kind of more of a tax question, depreciation and amortization. In QuickBooks, it's depreciation and amortization when they're being recorded on your books are typically when you're following either GAAP or possibly are nonprofit and get audited and have to do actual book depreciation. A lot of small businesses do tax depreciation, so they'll have the books, the assets sitting on their balance sheet, but at the end of each year, when the tax accountant prepares their tax return, the depreciation number they'll record just in one lump sum at the end of the year. So that's why we don't really talk about it very much today, or we don't really talk about it at all today. Okay. Does anybody have any questions before I move on to creating a new transaction? So just a brief overview of this. In your bank feeds, using your description, you populate the payee and the category, who you've paid and why you've paid them. And this helps to develop your customer list, your vendor list, and your chart of accounts. Okay, that makes sense to everybody? Awesome, awesome. Okay, so now we're going to go into creating new transactions and manually creating them. Okay, so we're going to first create a check because you can actually print checks from QuickBooks. QuickBooks doesn't generate checks, but it prints the data onto checks. So we'll talk about that first, and then we'll go into recording a deposit. So I'm going to click New in the upper left corner. And under our vendor column, we're going to select the option for check. Now, expense and check are very similar. Excuse me. The expense, there's a couple of differences. I'll just go through them quickly. An expense can be written out of a checking account, a savings account, or a credit card account. Whereas a check can only be written out of a bank account. A check has a check number and can be printed from QuickBooks. An expense has a reference number and it can be printed, but it's going to just print as what you see on screen. Check actually populates what the data is on a check. Let's see, is there any other real differences? That's really just about it. An expense can come from any account. A check is limited to just bank accounts, and a check has a check number versus an expense that has a reference number. Otherwise, they look exactly the same. Okay, so I'm going to open up the option for check. Going a little slow today, but we're getting there. Okay, so this is what my new check screen looks like. Okay, so the first thing that we want to do is enter a payee. Who did we pay? Okay, so we're going to type in, I usually use SCORE, but let's change things up today. Let's say we all paid Con Ed. So my payee is going to be Con Ed, and I'm going to select the option to add. I would have the name here. My type is going to be vendor. This is money going out, so it's defaulting to that. I can add additional details here, but I'm not going to for the time being. I'm just going to say Con Ed is good enough, and then I'm going to select save. The next field over is our bank account. Where is this money being sourced from? So you have the the 4 W's and who, what, when, where, and how is what the 5 pieces of information we need on this this transaction. So who did we pay? Where did the money come from? The payment date, when did it happen? And then we'd have the category as why this check was written, and then how much was the check for. Okay, but before we get down to the bottom, let's finish our mailing address. So I'll put in a mailing address. I'll use my office address. I'm just filling this in so that way I could show you how it prints onto a check. Okay. We have the payment date. We'll just leave as today. That's fine. The check number, I'm going to select the option to print later. Okay. Then we have category. So why was this check written? And this check was written for utilities. Okay. Our description, we can type in here. Our description does not appear on the check. It would print onto a payment voucher. The memo, if we scroll down just a little bit on this screen, the memo here would be what prints onto a check. So let's put our description here, December utilities. And let's say it's $200. Okay. So we have the amount. Then you have billable, tax, and customer. These are not required fields. This is only if you're doing job costing. So when we were talking about the bank rules and assigning transactions to customers, this is just an example of where you would do it. So let's pretend that this was travel expense and I had to bill back a customer and want to get reimbursed from them. I can actually tie it to that customer. This is also another example for the recording of grants. If you wanted to track that way, you can record who the customer or the donor is who gave you that grant. And then on every expense, every check, you can tie it to, okay, I paid Con Ed for utilities using grant funds from this grant. Everything we're doing right now is cash basis. That's another question in the chat. Okay. So we have category utilities, description, December utilities, and $200. And then the memo here, DEC utilities, just so we can differentiate them. Again, you can attach any file type here to stay with this transaction. If you wanted to include a copy of their invoice, a receipt, something like that, you can include that here. Okay. But once all this information is filled out, we have the 5 questions answered. Who did we pay? Where was this money sourced from? When was it spent? Why did it get written? And how much was a check written for? Important to note here, this balance that we're seeing, that's the balance in QuickBooks. That's your books balance. That is not your bank balance. Okay. Okay, so once all this information is good, does anybody have any questions before I get to that? All packages can do accrual. Yes, to an extent. All packages can do invoices, not all packages can do payables. We'll talk about the accrual side of QuickBooks after we talk about reconciliations. We'll take a little break and then we'll talk about that. Okay. All right, so have that information, and then let's say we want to print that check from QuickBooks. So I'm going to select the option to print check along the left bar at the bottom. Okay. So as I mentioned, QuickBooks does not actually generate a check for you. QuickBooks is going to print the information onto a check, and it handles two different styles. You can do voucher style checks or standard checks. So the voucher style has one check and then two payment vouchers, one that you keep and one that goes to your vendor. The standard style has three checks on that one sheet of paper. I would always recommend going the voucher style. It's just easier than always printing your checks in multiples of threes. And then for this, because it's populating information onto a check stock that you're getting from either your bank, from Intuit, or from a third-party check printer, you're just going to put that check into your printer, and then you have to set your alignment, which QuickBooks just makes sure that it's printing into the right fields in the right spot on those checks. So you would void a check to get this set up. The first check in your stack, I would probably void it and go through this process. I don't have a dummy check for you or a printer, to be honest. So I can't actually run this, but I'm just going to click, yes, I'm finished with the setup. This is unique to everybody's printer. Everybody has to do this. It's a one-time setup. You're not going to have to do it multiple times. Okay, so I'm going to hit yes, I'm finished with setup. Okay, then once that's set up and your alignment is all set, then we come here to print checks. Every time you come and print a check from here on out, this is the screen you will see. So you have the account. You would have to use this drop down to select where this money is coming out of, what bank account. So you're printing it from your checking account. The balance is the balance per QuickBooks, and the number of checks you have selected off down here at the bottom. So it's only this one check for Con Ed of 200. Then what we have to put in here is the starting check number. So that first check that we put into our check printer, what that number is going to be. So let's say we voided 1001 to set the alignment. It's going to be 1002 is going to be that next check. Important to note, when you have this set up and you put that first check number in, if let's say you had 10 check numbers or 10 checks that you're going to print, it's going to automatically assign all of those other ones the proper check numbers. It keeps it in a consecutive order. Then also the next time you log in to create a check, so let's say we print 1002 right now, next time we come in to go print a check, it's going to update to 1003, 4, and so on. You can always modify it and change it if it needs to be, if you handwrite a check, something like that. But if you're printing, it does keep a record for you of where you should be. Okay. So I'm going to select the option to preview and print, and just print it. And this is what it's going to look like when it actually prints out. So it doesn't actually generate a check. It's just populating information. The date, pay to the order of, the number written out, the amount written out numerically, as well as in full characters, and then the address that would show in your little window envelope, as well as the memo we put it on the bottom. Then you have the two payment vouchers, similar to, the Con Ed, who we paid, the description, and the dollar amount spent at the top, and one at the bottom for your own records. When you come back into QuickBooks, I close this window out, it's always going to ask you, did the check print okay? Did the alignment work right? Did the printer grab 2 checks instead of 1? Things like that. You have that option to either add them back to the print checks list, select off which ones do need reprinting, and so on. I'm going to pretend everything's printed correctly, everything's great, and we're going to select done. And see my starting check number has updated. Does anybody have any questions with recording checks? Beautiful. Okay, so now we're going to talk about deposits. So we're going to also select the new option over to the upper left corner of our screen. Then we're going to use the other column for bank deposit. Okay. So here we also have those same 5 questions to answer. Where did this money come from? Where is this money coming to? Is the question here. So we select the account. We're making this deposit to our checking account. When did it happen? We'll use today's date as well. For the time being, ignore this section. Okay, let's just pretend it's not there. We're going to talk about that when we go through our customers and receiving payments on our invoices. Okay, then we have this, add funds to this deposit. This is where we're going to be working on. Okay, so where it says received from, we're going to click into that box. And just a little side note. So sometimes it's not necessary to set up all of our customers. Sometimes it's, you know, we don't necessarily care about the individual names of our customers. So if we have a retail store, sell products online, each one of those individuals, we don't need every one of their customer names in our QuickBooks file, right? We also don't need the names of every restaurant that we've gone to. That comes through our credit card or through our checking account, or parking garages, taxis, stuff like that. So what I would recommend, rather than just leaving the field blank, I would create one generic name for those types of things. So on the customer side, we'll create a customer here, and we're going to call it Square Customer. Anytime we see deposits from Square, we don't need to know every individual who makes up that deposit. We just need to know that it came from Square. If we have a restaurant on our credit card statement as we're going through and categorizing it, we can just call it restaurant. We don't have to put every deli that we've been to, every restaurant, every bar, anything like that. It could just be restaurant. That data of where you went always will exist on your statement. So I wouldn't bog down your customer list or your vendor list with those types of things. And that goes for restaurants, parking garages, car wash, taxis, different things like that. You don't need to track all that information. Okay. So where it says received from, as I mentioned, we're going to create a new customer. We're going to call it Square Customer. Okay. As we start typing that in, similar to every other time we've done this, that doesn't exist on the list, we'll have the option to add. So let's select the option to add Square Customer. The type is going to be customer, and I don't need to add any details. This is a very generic customer name. There's nothing specific about them that I want to add. So we're going to select save. The account we're going to use is that same retail sales account. We can include a description if we want, a payment method, a reference number, but those are not necessary fields. So we can just put a dollar amount. So let's say we received $1,000 from Square. We can stop here and select save new, save and new, or save and close. However, well, let me ask this question first. Does anybody have any questions on this before I bring up the next piece that relates to Square and credit card processing? Okay, so where it says, so when anybody who uses Square knows that when you receive a payment from Square of $1,000, you're not going to receive that full $1,000. You're going to receive that full $1,000, but you're also going to be paying a fee to Square, roughly 3%. Okay, so we can either record this as $1,000, or it would be $970, right? If it's 3%. Square customer retail sales 970 is my full deposit that hit my bank. I can record it net of the fee, and that is totally fine. It is completely acceptable, tax-wise, everything, financial statement-wise. But if I wanted to record it separate, and if I wanted to know how much I had spent on bank service charges throughout the year, credit card processing fees, things like that, I can use this line 2 here to add it. So you have account retail sales. Here, we're going to say bank charges. Okay, because essentially this square deposit is 2 things happening in one. You're receiving $1,000 in sales and you're paying 3% in bank charges. Okay, this really comes in when we talk about customers later and receiving the payments. You're really going to see why this is important to differentiate these two. But just for the time being, just bear with me on this example. So you have a Square customer. I received $1,000 in retail sales, $1,000 of income, and then I paid a 3% charge. So I would write minus $30 to bring my net deposit, my total deposit, to $970. Okay, you don't have to record it that way. You don't have to break it out separately, but there are a couple of instances where you would want that to happen, or you can just record it all as net 970 retail sales, and that's totally fine. You would record it separately. Again, when we talk about customers, you'll see it a little bit more clearly, because if, let's say, a customer balance was $1,000 and you received 970 because you had to pay a charge to have that processed, the customer doesn't owe you $30. The customer has completed their balance. You made another payment of $30 out of the bank to process that. So just as a little aside, we'll talk about it again in a couple minutes, probably roughly about a half hour. Okay. Does anybody have any questions on this specifically? Okay, got a question in here. In this example, if the Square deposit shows up on our banking feed and we categorize it there, do we need to record it as a bank deposit at all? Also, does any of this change if you sync QBO with the Square app to automatically? Okay, so yes. So there is an integration with QuickBooks and Square. So Square can push all of your transaction to QuickBooks, record all of the sales, and as those deposits come in, they will automatically match to your bank feeds. What I'm showing you now is how to create new transactions. So this would be if let's say the bank didn't download this, or if you wanted to record this outside of what happened in you want to record it before it posts to your bank account, something like that, you would record it as a new deposit. If you're going to rely on your deposits, your bank feeds for all of your ins and outs of your bank transactions, then you probably would not have to do this, because you're going to rely on what came through your bank feeds for all of your individual transactions. This would be if you are recording it as it's actually happening. I guess I should kind of clarify that too. There's really two real ways of doing bookkeeping or record keeping. So let me think. There's in real time, and then there's after the fact. So what we've been talking about when it comes to the bank feed center, that's after the fact. That transaction has already happened. It's already occurred. It's already left your bank account or has been deposited into your bank account. That's after the fact bookkeeping, right? Then there's in real time. So in real time, you are cutting checks from your QuickBooks file. You're recording an expense as it's being made. You're recording a deposit as you're seeing it being posted to Square before it actually hits your bank account. Okay, does that make sense? It also is important, especially if you're maintaining receivables and payables. But again, that's going to be what we talk about after we take our little break in a couple of minutes. Does anybody have any other questions on deposits? Okay. So I'm going to select Save and Close down here at the bottom. Is functioning so slow today. Okay, so what we're going to talk about next is going to be reconciling your bank account. So while these transactions are coming in to your bank, sorry, this is clicked on something wrong. So while these transactions are coming through your bank feeds, it makes the data entry significantly easier, but there's also another step to it. It's called reconciling, okay?
If I'm aware in my list of accounts, for example, and that you know that it's a 3% fee. When you did that last transaction, would I have to put the 30? Like, let's suppose we know that it's a 3%. It doesn't automatically do that.
It's not automatically going to calculate that for you. If you are using Intuit Payments, that automatically calculates it for you. So there's a couple of things that Intuit kind of locks their product. So things like payroll doesn't integrate. If you're using ADP payroll or paychecks, it doesn't directly integrate to QuickBooks. It's not they don't talk back and forth to one another. There's certain exports you can get from those systems to bring it in. Intuit Merchant Service works the same way. So Intuit Payments is a payment processor that roughly charges the same 3% fee that Square or I can't even, WorldPay, things like that, all out there do. Intuit processes payments and charges you that same fee. But when they process payments, they automatically post it to your books. So they automatically calculate the fees on those transactions for you and have it already recorded on your financials. Other systems don't do that because it's not built to be able to do that.
Thank you.
Yep. Okay. So when it comes to reconciling, we can go either to accounting along the left side menu.
Hey,
And then
Christine, this is Constantine. Just before we move on, I posted a question on creating a new transaction for like I work from home, so it's a home office, and I want to allocate house maintenance expenses as utilities expenses. And I'm just wondering what's the best way to do that?
So is it going to be coming out of your business checking account, or is this a personal expense?
It's well, there's different ways. So let's say it comes out of a business, yeah, I guess I pay myself from a business checking account.
So let's go with the example. I'm going to go back into my Con Ed check. You guys can just follow along on screen. You don't have to actually do it. So with this transaction for 200, right? I owe Con Ed $200, right? I categorize that as utilities. So I have $200 here. But if, let's say, a portion of this, Con Ed doesn't know it. Con Ed doesn't really care if it's my home office or if it's just my home in general. They just want to make sure they get their $200. On this, similar to how we use multiple lines on our deposits, we can use multiple lines on our checks too. So let's say we had home office utilities. You can add another account and add another line and make this, I'm just going to do it quickly. So let's say I paid them 200, 100 was for the rest of my apartment, 100 was for my home office. And if I have it broken out like that on the check, Con Ed doesn't see that. Con Ed doesn't know that I broke it out that way. Con Ed doesn't care that I broke it out that way. Con Ed just wants to be paid. They just want their $200 for the December utilities. So you can use as many lines as you would like or need to here. Does that make sense? Does that answer the question? Yes, no, maybe so. Okay. If not, just shut it out again, and we can go back. So I'm going to select save and close down at the bottom, and I'll show you how this affects your financials in just a minute. We're going to go through reconciling first. The other question here is, who does accounting in real time? It's kind of a hard question because it could be in both ways. I would say majority of people who are recording things just based on their bank transactions. I think most businesses for that aspect of the business do record a lot of their expenses, office expenses, rent, advertising stuff. They record that after the fact. However, there are people who are recording invoices and recording vendor bills and things like that. That's actually in real time. So it can be one or the other, or it can be a mix of both. It's kind of a, I think it's always kind of a mix of both. Unless there's like approval kind of things going on, then maybe everything would be in real time. But a lot of small businesses function mainly, the transactions actually happened and then they record it after the fact, especially if you are cash basis. Okay, so now to go back to reconciling. So we're going to select accounting along our left side menu, and you have two options here, chart of accounts and reconcile. We're going to select the option to reconcile. Okay, we got a couple of little pop-ups here. And okay, so when you're in this screen, reconciling again is taking a bank statement or a credit card statement, a third-party financial institution monthly statement, and comparing it to what's in your QuickBooks file. So what we would do here is we're going to select what account we want to reconcile.